or starting or intermediate. There are things that should be like non-negotiables for a trader. That is, if you want to last, if you want to be a trader for long. I've seen my few, I don't know whether I should call it years or months or what, but the time I've been trading, I have seen a lot of people come and go. A lot of people. And it's because we run to trades without understanding some few things, and that is what I want us to look at today. All right, so where do we start? I hope you have a biro and a place to write. I'll just take you through a few steps that you need to have, or few things that you need to know for you to become such a great trader. The first thing is to understand that in trading, let me write this one here so that we remember. In trading, okay, survival is better than profits. Do not forget that. Survival is better than profits, always. Now, I was telling, I don't know whether he's here, a friend of mine who usually trade with called Brian. I was telling him that the days I made a lot of profits, those are the days I blew my accounts. And I've blown several accounts, close to 5. Yeah, close to 5 of them. Close to 5 accounts. And I've checked my trading journey, and I discovered that day that I will make a lot of money, that is also the day that I will lose all of it, because we forget the basics of trading. Those of you in my other group, you realize that even when we lose a trade, not even a trade, trades, I'm not bothered completely. I'm not bothered. I'm sure some of you are saying, this guy brought us here to lose trades. No, I know what I am doing. And I know that in the wrong land, there's someone who made money that day, and they will not be trading tomorrow because they don't have the capital to trade. But for me, I've learned, I've had an account of $50,000. Well, not my money, but a funded account, and I blew it. You see, most people say that when you have an account, when you have a bigger account, you have a better chance of making more money. Well, there's an element of truth in it, but if you cannot manage $100 account or $50 account, you cannot manage a $50,000 account. It starts there. And for us who are doing the December challenge, you need to know that right now things are even easier for you. The moment we get flooded, I'm sure even some of you will run from my group, because the moment you get flooded, emotions are very high. Emotions are very, very high. Where is my nephew? He's called Joe, like me. Oh, he's not here. So Joe has been sending us trades in the group, winning trades. So I was just looking at him, because this is the first time he has seen a Forex setup. only for him to call me yesterday and told me that he blew the account. And he had passed both phase 1 and phase 2, all evaluation 1 and evaluation 2. So I was asking him, what happened? I thought you were making profits. I don't know. I think he left the trades overnight, and the slippage and the gaps. By the time he came in the morning, he opened the trades on today, the account had gone. And those are the things that those people that show you money and show you lifestyle, they'll never tell you. They will never tell you. Psychology is key. Survival is better than profits. So if you can keep your account for long, you are better than someone who is just taking trades, winning without a strategy. And you see, this market is very funny. Even if you are a complete amateur and then you start to trade, you will win sometimes. You will win because the market makers doesn't want you to say that trading is a scam, sorry. Because it's your money they need. That $50 that you funded, they need it. Yeah, they need that $50. They need that $20. So sometimes you will win, and then they will wait at you on the other side of what is it called? Greed. Yeah, the other side of greed. And they will deal with you perpendicularly. So in trading, survival is always better than profits. So there are things that should be a goal in every trader. Every trader should keep this as his or her goals. Number 1, protect your capital. Protect your trading capital. Protect it. Protect it like a child. Protect your trading capital. Okay? Protect your trading capital. Okay, that is number 1. Number 2, avoid emotional trading. Avoid emotional trading. Avoid emotional trading. Number 3, avoid revenge trading. Avoid revenge trading. I usually tell people, if you trade, let's say you have a trading plan, which we might look at in the next few minutes. If you have a trading plan, and let's say you say, I want to trade, for example, I want to take 4 trades in a day. 4 trades in a day. And then you go on a losing streak and you lose all the 4 trades. Don't add more positions to try to recover the money that you have lost. That is revenge trading. And most of the times, revenge trading will blow your accounts, because amateurs focus on how much they can make. Professionals focus on how much they can lose. Let me take that again. Amateurs, or I write it down. Okay, so this is a good point to note. Okay, nikiandika nita waste time. So amateurs focus on how much they can make. Professionals focus on how much they can lose. There's a book I sent, a PDF I sent on the group. It's called The Best Loser Wins. The Best Loser Wins. What that book is talking about, because it's more about psychology and understanding how you trade. The book is telling you and me that the moment you master losing trades, you will never leave this market. The moment you master losing trades. Don't master winning trades. master losing trades. So when I started the group, the deck challenge group, we started doing a lot size of 0.5. I had a very good trading plan, and the plan was to get 20 pips in a day with a 0.5. That is how much? That's about $100. So within 3 days or so, maybe let's say a week, we could have been done with the evaluation. But as we continued, because the strategy I use SMC is it's a strategy that is built on a tight stop loss. Okay, a tight stop loss. So we focus more on risk to reward ratio. I know there are people here who trade 1:2, 1:3, 1:4, which is good. My mentor told me get trades that can give you 1:10, so that once you win one trade, you compensate 10 losing trades. And once you win 2 trades, it will take you 20 trades. Okay, it will take you 20 trades, 20 losing trades for you to go to break even. Okay, so that thing has helped me in the long run. It has helped me in the long run, because if I lose a trade, I'm not like all emotional everywhere, like, oh my god, this thing is not working, what do I do now? No. When I lose a trade, it's an opportunity for me to get a better trade. It's an opportunity for me to get a better trade. Today we took some trades with my people in the group. In the morning we lost 2 trades. I told them, you don't worry. Today is Monday. I've never, from my strategy, I've never lost on a Monday. I don't know why. I haven't. So I knew I'll get a setup. And yes, at the end of the day, we got a setup. I think 2 trades, and that was it. We are done on that day. Even if you make $20 in a day, you are with your strategy, you are better than someone who made $600 without a strategy. You are better. I'm telling you. Between that person and you, we will see who will become a millionaire first. Because this is business. This is another kind of business. If there is no discipline, you will not go anywhere. I'm telling you. You will not go anywhere. In trading, running in the wrong direction is worse than someone who is studying. When you are running and you are running in the wrong direction, you are worse than someone who is not moving at all. Because at the end of the day, this thing will catch up with you. I'm sorry, I'm a preacher, so sometimes I preach, but I'm not preaching, so I'm just giving you nuggets, trading nuggets that will make you be consistent in trading. Be consistent in trading. So 90% of traders fail not because they cannot analyze the market, but because they cannot manage risk. So that's another good point for you to note. 90% of traders fail not because they cannot analyze the market, okay, but because they cannot manage risk. Everyone is good in understanding market structure, these things, know where your entry is, but if you cannot manage your risk, because there is no strategy on earth that is 100% profitable. I was telling people that I would rather, because my strategy, the strategy I use, from the report I'm getting from my prop firm, I have several accounts that I'm running, although I have now stopped trading them so that we focus on the deck challenge. So from my account, they are telling me that I'm 30%, what is it called, profitable win ratio. Yeah, that's the word I'm looking for. It is 30% win ratio, but I'm still in profits. That's the crazy thing. So everyone is trying to sell you signals, and then they tell you all strategies, and then they tell you this is 70% profitable. Can anything that is that much profitable, look at the risk management. It's crazy that someone can put a 50 pip stop loss, 20 pip stop loss. That is actually my take profit. 20 pips is my take profit. And I usually say I would rather work on my strategy instead of adding the, let's say, the take profit. I'll continue adding the lot sizes. That is what my mentor does. He trades with a lot size of 12. Maybe he will do a 3 pip stop loss or 4 pip stop loss, and then he targets like 20 or 30 pips. You do the math and tell me. He makes lots of money. But now that strategy, even if it is 30-40% profitable on win rate, that guy is better than someone who is doing a 70% win rate with 1:2. I hope you are getting my points, please. If you are getting the point, give me a thumbs up. I don't want to look like I'm preaching. Yeah, so these are the secrets that most traders will not tell you. These are the secrets that most traders will not tell you. Let me show you, for example. Today we took 2 trades. We took 2 trades, and okay, we took 4 trades. We lost a trade here. We lost a trade here, and it's because of the broker I used to analyze. Okay, that is another thing that can make you lose a lot. That's another thing that can make you lose a lot. The broker I used had lied to me. You see, I saw this as a sweep down. So I was looking for longs. So we came and took a trade from somewhere here, but we were stopped out. But we got this trade. We got this trade, and it was a crazy sniper entry. The people from my group, am I lying? Or I'm saying the truth? Yeah, it was a crazy sniper entry. Stop loss was like 2-3 pips or thereabout. 2-3 pips or thereabout. So this was my target, which will eventually happen. This will eventually happen. This one. You see where you have the trade line liquidity here. Trade line liquidity. It will surely happen, but it might not, because what happened today, allow me to digress a bit. Allow me to digress a bit. So there are few things that happens every day in the market. The market rages, the market manipulates, then the market distributes. Okay, so if you look at this, and the market can start with the opposite. Okay, it doesn't have to like follow. If you follow this is what I use to backtest all this. So if you look at this, this move here was supposed to be it's a accumulation. Okay, this is accumulation. This move here, this is Asian range from 2 a.m. to 9. This is accumulation. Then can you see this can move here from here to here? You see that move? That is what we call manipulation. Then we have this move here, which we call what? Distribution. We have that move that we call distribution. So what happens in the market is, most of the times the Asian range accumulates, then the London session manipulates, then the New York session distributes. But if you look at this market today, if you look at this market, the market can never come here. This is actually the highest you will see this week. See this Monday high, that is the highest you will see this week, because according to my analysis, I don't think we have a reason to go up. And then our daily candle, let us see. We will see how this candle will close. We will see how it will close. Anyway, let me go back to where we were. Good. So I was saying the Asian range usually accumulates, then the London manipulates, then the New York distributes. But if you look at this, the Asian range accumulated, then inside the London session there was a manipulation and a distribution. So what will the New York do? It has nothing to do than to rage. That is why the people who are in my group, I told them you can remove because I don't advise letting the trades run overnight. So I told them remove the trades, because this is maybe the lowest you will see the market today until maybe tomorrow. Now when the market opens, the same thing will happen. The same move will happen. We will have accumulation, manipulation, and then distribution. So this is what I was telling you. We came and took this trade from somewhere there. It was such a sniper entry, and that was our, let's say because we usually target 20 pips. That is our mode of trading in the group. Okay, the minimum is 20 pips, and then the maximum stop loss is usually 3 pips. But in case we want to, because it's good to note this, in case we want to, maybe we are not sure about the stop loss, and maybe we add the stop loss to 4, 5, or what we do is we reduce the lot size. Okay, we reduce the lot size. Now if I show you the trades I did today, we lost how many trades? Okay, I'm not hiding anything. It's not like, okay, this one, how comes it's not opening? It does not want you to see what I'm talking about here. I want to teach you practical trading. You will thank me in the next 10 years. You will thank me, I'm telling you. I'm telling you. Look at this. We took we had these 3 trades. I think there were 2. I sent 2 on my group, and then we lost 2 trades. Okay, and each trade we lost how much? This is $9 plus 17. That's about $16. And then we won 2 trades. We won this one and this one. And it was not actually, we removed. Okay, I don't know whether others removed. Labda bado kwa hiyo trade. Kitawaramba usiku. These two. We were supposed to remove. When I saw that the market is raging, I just advised them to remove the trades. Now look at this. This is, let's say that 2 plus 17. That is $50. Okay, this is $50 from 2 trades, and we lost $16. So we won 2 trades and lost 2 trades, but we are in profit. If you look at this, I'm still in profits. Okay, why was this so? Because number one, look at this, we are trading with a 0.2 lot size. Well, of course, this is GU. If it's gold, we cannot trade with this. This is GU and EU. We are trading with a 0.2. It's not that, because there are some of these trades that I'm very sure that they will happen. If you look at this, this is actually the exact trade. This is the exact trade I'm talking about. Look at the precision of that trade. Look at the precision. So our stop loss was about, I think, $13 or thereabout. That means if I lose, let's say, let me cap it to maybe $15 per losing trade, I'll have to lose 10 trades to lose $100, and this is a $5,000 account. $5,000 account. So why am I telling you this? I'm telling you this so that we go back to where we were. Why is that my thing? That survival in trading is better than profits. If we want to pass that, okay, where is my thing, man? That evaluation, which we will definitely pass that evaluation. We will definitely, and we will have some money for Christmas. I'm telling you, it will happen. It will happen. If we make an average of $50 and our target is $300, how many days do we need to get that thing done? Tuangu, fanya hesabu. How many days do we need? So people here don't know maths. Is it that bad? Good. So we need 6 days. We need 6 days for us to pass that evaluation. Let's say we are mafias and we trade, we say no risk, no Ferrari. We trade with a standard lot. And then we target the same. It's $20. I mean, it's 20 pips, but then we lose $3 per trade, and then we lose 10 trades. How much have we lost? That is like $300, right? Now $300, you've even gone past the daily drawdown. Just a minute, let me take a call here. I don't know who is calling me. Hello. Poa. Umetumwa. Kuja hapa first floor hapa kwa studio. Just a minute, let me take something here. Sorry for that. I'm back. Apologies. I'm back now. So, what were we saying? We are saying that if we take the same trade with a standard lot, which we can. I had a $25,000 account that I blew with a standard lot. So if we lose 10 trades, that tells you that we've even gone past 250 daily drawdown for the prop firm. That means I don't celebrate people that make money in trading. I celebrate people that show me how they make money in trading. Okay? And this is the kind of mentorship that you don't see nowadays online. People only want to show you the money, but they don't want to show you the how. Okay? And this thing starts with what? With risk management. Risk management. You have to manage your risk. You have to manage your risk. Okay? You have to manage your risk. So we've said that 90% of traders fail not because they cannot analyze the market, but because they can't manage risk. Even with the best of the best strategy, poor risk management is equal to guaranteed losses. Even with the best strategy, the best there is, poor risk management will definitely result to a drawdown, to a losing streak. So there are main concepts of risk management, core concepts of risk management. Number one is the account size, your capital. What capital are you working with? And what is recommended is risk at most 1 to 2% of your account per trade. 2%. Risk less than 2% of your capital per trade. It might take you long to flip the account, but you will be here for long. And I'm telling you, after this free October class, we will be doing trades with a competition account. I'll guide you how we'll do that. And each one of us will be given $100,000 to trade with. 100,000. 100,000. And I'm telling you, there are people who will still blow that account. 100,000. I think it has a daily drawdown of close to $5,000. And I'm telling there are people who will still draw down the account. The goal is that once we are done with this class, I know there are people who've joined late, and we'll see what we can do about it. Once we are done, we will open the accounts, all of us, and then we will have a target. It is a demo account, but then you can win prizes. It's one of these prop firm. You can win prizes and things like those. So it still helps you to target something. So we will open the accounts, 100,000 each one of us, and we'll start to trade. Maybe we can have, and I'll not be guiding you on anything. No, you will be trading with what you know at this point. And then after a month, we will come back and see. Some of us will have blown the accounts, some of us will have flipped the accounts, and it will teach us risk management. It will definitely will. So you risk at most 1% per trade. Now, okay, why is this thing talking to me? Before you enter a trade, there is something called CEST. Okay, CEST. Before you enter a trade, there is something called CEST. C stands for what? Condition. What about E? Entry. What about S? Stop. I have 10 minutes only. What about T? Target. So every time before you enter a trade, ask yourself, do I have all this in place? So what are the conditions you look at before you click execute? Most people, what they are doing is called gambling. It's not trading. Most people, I'm telling you, most people are doing gambling and they call it trading. No matter how much you are making with gambling, that is not trading, and trading is not gambling. Trading is out of informed decisions. That is why if I lose a trade, I used to feel so bad, like I can kill myself. Nowadays, if I lose a trade, I don't feel anything. Well, of course, you will feel like, oh my God, after all that, there are many times I've woken up at 3 a.m. I do crazy analysis, and then once I put up a trade, I lose. So something like that you can feel, because of course you are human. But the reason I cannot go on maybe start reverse trading, all those things, is because of this. Before I enter a trade, I ask myself, what are my conditions? Okay, what is my entry? What is my stop? What is my target? I've told you, you see this thing, you'll tell me tomorrow, because you'll tell me what will happen. This thing, finally it will come down. Can you see it has created some equal lows here? Here. This is liquidity. So finally it will come down. But I have a trading condition. At 6 p.m. Kenyan time, I close all my trades. Whether I'm in losses or I'm in profits. That is my condition. Okay? So this helped me, like that my guy who left trades running till weekend. He had passed both phases of the challenge, but then now he has to buy another account. He has to buy another account completely. Do you know why? Before you enter a trade, ask yourself, what are my conditions? Irreducible minimums. There is echo. My God. Who else can hear the echo? Because I can't. Do I have echo? My group people. Someone told me there is echo. Are we here? So I think that has been sorted. Okay. So you get what I'm saying? Conditions. You must have conditions. So every time, if you look at all the trades I have done, every trade I trade them with conditions. We had another trade here that we got that was very nice. This one, this move here. And I'm teaching the people that I have in the group, I'm teaching them discipline. What is discipline? Discipline is, unless our conditions have been met, do not close a trade that you have started. Even if you had $200 and it's coming to draw down. There's a trade we took another day. it was close to, I think, $50-$60. Then it came back and took us out. That is trading stamina. Okay, that is trading stamina. That the same thing we did when now the trade is on our favor, and maybe we are targeting 20 pips, and then you are saying, wow, I want to remove this trade before it let me get the money that is already here. And then you get $60 and you could have gotten $300. So those are some of the conditions that you should have. The next thing, what is your entry point? What is your stop loss? What is your stop loss? And then what is your target? This is one of the most important things that will help you. I need to talk also about something else called market hopping. Market hopping or strategy hopping or market prostitution. I know that's a harsh word, but for the sake of understanding, it is called market hopping or market prostitution. So what is market hopping? What is market hopping? This is moving from one strategy to another. One strategy to another. You come to MJFX, you see that you are not making $1,000 per day. You go to Kemanogo FX, you see that you are not making $200 per day. You go to Kwashiorkor FX, you see that you are not making $500. Yani, you move from one strategy to another. You don't have a strategy that you are working with. And a strategy means that even if the strategy is losing, because the reason we lose in our strategy is because we are still learning the strategy. You learn the strategy as you move. What my mentor told me, there are a lot of things that I have discovered by myself. So this is one of the things that will make you become, you will, at the end of the day, you will say that trading is a scam. Trading is a scam if you do market hopping. So today you are doing CRT, tomorrow you are doing support and resistance, the other day you are doing what else? We have a lot of strategies. Trade lines. The other day you are doing Larry base, Larry, whatever, all those things. So this is like someone who is doing jack of all trades and master of none. Jack of all trades and master of none. So what I advise is, based on what you know now about the market, you need to decide which strategy are you going to study. Me, I do SMC, which is also ICT combined with CRT. So every time I go, whether it's on YouTube, whether it's on ChatGPT, wherever I go, I'm looking for any information that will help me understand this better. I hope I'm helping someone. So if you go to maybe YouTube or wherever, any information that is outside this, what will that information do? It will make you an indecisive trader. Okay? You will become a trader who does not have an edge. And every trader in the world that is making it in trading, they have an edge. They have an edge. So you are either doing, so for example, if you are in this group now, and maybe you trade support and resistance or trend lines, it tells you that you're in the wrong place. It tells you, because the more I give you information about SMC, the more I am messing with what you already know about the strategy maybe you prefer, unless now you want to learn the new strategy. So market hopping, market prostitution, you need, every time you go to the market, look only for videos that relate with your strategy. Videos that relate with your strategy. This will help you to have an edge on what you do. Usisikia ati beshte yako alitengeneza $500. Unatumia strategy gani? You change the strategy. Then after few days unasikia kuna mwingine hapo ameingia TikTok mnoma sana. And then they tell you I make $2,000 per day. Simple strategy. Then you will be everywhere and you will not have an edge. And at the end of the day, you will not know anything. So me, I've died with my strategy, whether it makes money or not, because I've seen my mentor make money with the same strategy. So it means the problem is not the strategy, the problem is the learning and such. So market hopping. Okay. So 2 more things and maybe we will be done. The next thing is what we call risk to reward ratio. Okay, risk to reward. Look at this. This was a 19 risk to reward ratio. 19. But what I prefer, this is my own, I know my mentor will not be happy if I say this, but me, what I would prefer is don't take a trade that is not giving you at least 1:5. At least 1:5. At least 1:5. That means this trade we took today, our risk was $3. So if we target $15, we are still in profits and in good RR. So target 1:5. So if you lose 5 trades, no, if you lose 1 trade, if you lose 5 trades and win 1 trade, you are still in break even. Yeah, I think this is better. 1:5. This 1:1, 1:2, 1:3. In my own opinion, it is good because there are people making money with it. But in my own opinion, it is too risky. Unless now you've become, maybe you have like $20,000, your money, your own money. You can do such risks. But then you cannot, maybe you have a $200 account and you are risking 1:1. My friend, you will die young. You will definitely die young, and it is not a good thing. So at least 1:5. 1:5 is a good risk to reward ratio. 1:5. So there is a way you calculate your lot size, but I think that is common knowledge. That is common knowledge. What I'll tell you is that if you have a $5,000 account, trade with not more than 0.5. And that is not gold. That is the normal Forex pairs. Gold, I'll not give because I don't trade gold usually. I don't trade gold. All right. So I think with what we have, the only thing is you do not have to be right all the time. You just have to manage your wrongs wisely. You don't have to be right all the time. Just manage your wrongs, manage your losses, manage your losses. This will help you become a better trader, a better disciplined trader. And one thing I like about trading, it even teaches you discipline in your real life now. Real life. It teaches you discipline. It teaches you discipline. So you don't have to be right all the time. You don't have to be right all the time. I want to give you 6 mistakes that traders do or traders make. Who is this? Isa, you have a question? Yes. Okay, I think what I'll do, I will we will try to explain this before I'm done. I'll try to explain what is happening kwa GU, which is also happening somewhere kwa EU, but EU really sold, by the way. Okay, this is good. This is good. So I'll try to explain what is happening here. What is happening here? Because what we'll have is a sweep up, a sweep like you see this one, and then it comes back to the range and then it continues to sell. But I'm yet to analyze today's setup so that I can understand what is happening. But what I know is that this market is selling up to where we have the order block here. Yeah, if not that, the market can come take from this new which looks like equal lows here. No, it was taken out, this order block, and then continues to buy. But I think that is something we can do later. So 8 common mistakes traders do. Number 1, trading without a stop loss. Trading without a stop loss. This has made me lose many accounts. Many accounts. So before you do a trade, ask yourself, where is my stop loss? Where do I put my stop loss? Number 2 is over leveraging or using too much lot size. Number 3 is risking more after losing trades. So this is what we call revenge trading. So if you are trading with 0.2 and then you lose 3 trades, you tell yourself, if I do a standard lot and I just need 10 pips and then I recover my losses, and that is how you die. Number 4 is moving stop loss to avoid losses. Moving stop loss to avoid losses, unless it is something out of logic. Unless something out of logic. For example, you can find that you are taking this trade from here. Maybe you are taking with something, and then you realize the trade is already running, and then you realize you had made a mistake and this will be taken out. You can move your stop loss to there and then leave it. But there are people who keep moving the stop loss, hoping that a miracle will happen and then the market will come down. No, now that is gambling. That is gambling now. You are becoming a gambler. You're becoming a gambler. By the way, there is no way, if you check, there is no way the market will come past this. Okay, there can be a way, but well, we need to know until tomorrow. Yeah, so that this tells me that we are bearish. Anyway, that is a digression. So don't move your stop loss. Number 5, not using a good risk to reward strategy. Risk to reward. I've already advised you, but of course you are the trader and you have your own money, so I cannot tell you how to use your own money. But my advice is a 1:5 is not a bad risk to reward. A 1:5. The 6 is ignoring drawdown limits. Now, one of the best things I like is to use a prop firm account. I've never funded my own account. Never. And I don't think I'll ever. I don't see a need. Because with a prop firm, you can trade even up to $500,000. The reason I like it is because of how strict they are about drawdowns. Daily drawdown, for example, with the account we are doing in the group, if you do more than $250 per day, your account is gone. It doesn't matter how much you've made. It doesn't matter. If maybe you draw down more than $500 overall, your account is gone. Now, this teaches you that trading is not a get rich quick scheme. It is not. If someone told you that, they lied. Trading is a business. I tell people, trading is the only sure business that can make you a millionaire. But trading is not a get rich quick scheme. So this thing helps me because I don't over leverage thinking that I can make $10,000 in a day. Those days will come. I'm telling you, those days will come. My mentor does $10,000 without any pressure, but he has been trading for long. So those days will come, but you need to move gradually. Gradual. Okay? So don't ignore. You need to put your own limits. Like you need to tell yourself, because not all of us here are trading prop firm accounts. Some of you have your own accounts. You have funded. You need to tell yourself, if I have a $500 account, I cannot draw down past this much in a day. Once you get to that drawdown, go and do something else. Nambiaga watu, read a book. Go and journal your trades. Go and watch a movie. Go and wash your hands. Wash your whatever, anything. Just do something that is not related with trading. And don't open those charts until tomorrow or the day you wherever you do your recap for the day. It really helps you, and it has really helped me. Once I get to some point, okay, I just move to other things. That is why when doing trading, you can try to do some other things, not literally business oriented. If it's business oriented, it's okay, but you can try to do some things. Try to do something so that at least if you lose on trading, you are winning on other things. And if you win on other things and you are losing in trading, you are not completely disappointed. Okay? So that will really help you. So with that, I think I am done. I don't see anything else here that we are supposed to do. But let me talk about fear and excitement. Now, if you are over excited when you win a trade, you have a very long way to go. Very long way to go. Very long way to go. And if you are sad, completely sad when you lose a trade, yani hata uongereshi bibi kama umeoa. Kama umeolewa, siku hiyo bwana akuli. You have a very long way to go. Very, very long way to go. So you need to manage your emotions. Don't be overexcited and don't be overly sad when you lose a trade. So that is what we call emotional intelligence. So with that, I think I am done for today. I will do my analysis on this Isa, and I'll set them in the group. Probably I usually wake up at around 3 or 4, so I'll set it in the group so that you can see my analysis on this. And I think with that we are done, unless there's someone who has a question. It was such a nice session. If you put those things in practice, I'm telling you, in the next few months you will be a force to reckon with. A force to reckon with. I'm telling you. I've seen so many traders come and go. But as for you, you will be here for long. So good night.